Welcome to Iron Financial, where we forge stronger portfolios and cut through market weakness. Today, we are putting Oklo Inc. under the microscope. Ticker is OKLO. Now, post-earnings, the market is buzzing. But let me tell you, the numbers are telling a very different and, frankly, a very dangerous story. We're going to break down whether this company is building a generational fortress for the new energy economy, or if it's just a speculative house of cards waiting for the first strong wind to blow it all over.
So here it is. This is the central question we're tackling today. This is the kind of paradox that splits Wall Street right down the middle. And honestly, it's the kind of situation that can make or break an entire portfolio. I mean, think about it. On one hand, you have what looks like a financial catastrophe in the making, a complete, total absence of income and a nine-figure loss from just running the business. But on the other hand, you have this bullish, almost euphoric market reaction that sent the stock soaring after hours. This right here is exactly the kind of setup where uninformed investors get absolutely burned chasing hype, while disciplined analysis uncovers the real story. And that's what we're here to do, find the real opportunity hidden inside the paradox.
All right, let's put this into plainest terms possible, because the numbers here are just wild. Look at the screen. The situation is split right in two. Over on the left, you've got the financial reality. I'm talking about the profit and loss statement, and it is a horror show. $0 came in the door. Not a single one. Meanwhile, they spent over $139 million just to keep the lights on and pay their people. That's a nine-figure hole they're digging. But then, you look over on the right and you see the ticker tape. The market saw that financial disaster, and what did it do? It rewarded it with an over 8% jump, pushing the company's valuation to nearly $10 billion. This is the kind of pure hype that can level your portfolio if you're not extremely careful. So the question we have to ask is, what are we missing here? Or what is the market getting fundamentally wrong?
To figure that out, we need a structured, disciplined approach. We're not just going to guess. We're going to break this thing down piece by piece, just like constructing a building. First, we're going to dig deep into the balance sheet. This is what I call the fortress. This is where all the bulls are living right now. Then, we'll take a hard look at the company's blueprint, its ambitious business model, and the key deals that are supposed to make it all work. After that, we're going to do what we do best here at Iron Financial. We're going to stress test the entire structure. We'll be looking for every single crack in that foundation. And finally, we will deliver the Iron Financial verdict: is Oklo a generational opportunity or a catastrophic trap? So let's get started with the first pillar of our analysis, the foundation itself. Let's open the books and see just how strong this fortress really is.
Okay, so here's the key. The market isn't looking at the income statement. Frankly, it's ignoring it completely. It's looking directly at the balance sheet. You know, a company's strength, its ability to withstand storms, it always starts with its foundation. And Oklo's foundation appears to be built on a mountain of pure, cold, hard cash. This is the first, and I'd argue the most important pillar of the entire bull case. You have to forget the losses for a moment and just look at the capital they have on hand. So get this. They ended the fiscal year 2025 with a formidable $1.4 billion in cash and marketable securities. Now, for a pre-revenue company, especially one in a capital-intensive industry like, nuclear energy, that's not just a healthy number. That's a significant war chest. This is the starting block for their entire operation. It's the fuel for the fire before they ever produce a single watt of power for the grid. But they didn't stop there. No, they knew that even $1.4 billion wasn't enough for the sheer scale of their ambition. So in the very first month of 2026, they went out and slammed another $1.18 billion onto the pile. They did this through their at-the-market, or ATM, program. Now, this is essentially a way for the company to sell newly issued shares directly into the open market. And what it tells you is that there was massive investor appetite for this stock, even at these sky-high prices. This move is absolutely critical. It signals extreme confidence from the capital markets.
So the crucial point is, when you add it all up, we're looking at a company that is sitting on a pro forma war chest of roughly $2.5 billion in cash, with very little debt on the other side of the ledger. Now that is not a speculative startup running on fumes. That is a fortress. This capital is the enabler for their entire strategic agenda. It buys them time, it buys them talent, and it buys them the resources to execute on projects that take years and years to develop.
Whoa, hold on a second. A fortress of cash is great, but a fortress with no purpose is just a museum. That current ratio you see on the slide, 67.51, that is absurdly, almost comically high. Now, to be clear, what that means is they have over $67 in current assets for every single dollar of current liabilities. Yeah, it screams that they have the liquidity to pay their bills, but it also screams that they aren't deploying that capital effectively yet. This cash is just sitting there, waiting to be spent. And let's not forget inflation. At a conservative 3% inflation rate, that $2.5 billion is losing $75 million in purchasing power every single year it just sits idle. So the clock is absolutely ticking.
Exactly. That cash is the foundation, but it's worthless without a solid plan, a blueprint to build from. So let's move to that blueprint and see how this all builds out. Because this isn't just about building one power plant. That's a small-minded way to view it. Oklo is attempting to construct a fully vertically integrated nuclear ecosystem. This is where the long-term, multi-decade value is forged. If, and that's a big if, they can actually pull it off.
Their strategy is designed to connect the entire value chain, which is a massive differentiator in this space. Just look at the steps on the screen. First, the core business. They plan to build and operate their own Aurora small modular reactors for power generation. But here's what's critical. They're also getting into fabricating their own fuel, recycling used nuclear materials, and even producing high-value medical and industrial isotopes as a byproduct. This integrated model is designed for two things: supply chain resilience, which is absolutely critical in the highly regulated and geopolitically sensitive world of nuclear fuel, and creating multiple non-correlated value streams. It's a closed-loop system, essentially turning waste into assets.
Right, an ambitious blueprint, no doubt about it. But a blueprint is just expensive paper without a client who's willing to pay for the building. This is where the whole story pivots to the meta deal. This is the cornerstone of the entire bull thesis. So, the question for every single investor out there should be, is this just hype or is it real? Is this a firm commitment or is it just a fancy press release designed to pump the stock?
It's as real as it gets at this stage of the game. Management was very clear on the earnings call. This is a binding offtake agreement. We're talking about Meta, one of the biggest power consumers on the planet, who is desperate to power its data centers for the AI revolution, which, by the way, are some of the most power-hungry facilities ever built. And they have committed to buying power from Oklo in Ohio. This isn't just any customer. The company calls them an anchor, and that's exactly the right word. It provides massive validation from a tech giant which de-risks the first commercial projects. It also creates a template for financing and for signing other major players who are just starving for clean, reliable 24/7 power.
Okay, but an anchor is only as good as the ground it's bolted to. And while that pile of cash is impressive, the rate at which they're burning through it is terrifying. The fortress might be tall, but the walls are getting thinner every single quarter. This is where we stop looking at the pretty blueprint and we start looking for the cracks in the armor. And believe me, they are there.
Now, what's really interesting here is the trajectory. This isn't a slow leak, it's a gusher. Look at the chart. Operating expenses more than doubled in a single year, jumping from $52.8 million in 2024 to nearly $140 million in 2025. And what was that for? It was primarily for hiring more people and paying consultants and lawyers. Think of it this way. They are spending hundreds of millions just to draw the blueprints and hire the architects for this fortress before a single stone has even been laid. That is a serious, serious drain on the treasury. And it is not slowing down. This is their own guidance for 2026. They are projecting to burn through as much as $500 million. Let that sink in for a second. Up to $100 million in operating costs just to run the company, and another $450 million in capital expenditures to actually start building things. At this rate, that $2.5 billion fortress starts to look a whole lot smaller real fast. We're talking about burning through 20% of their entire war chest in a single year, with zero revenue coming in the door. Every dollar spent before a single watt is sold is a dollar of pure, unadulterated risk.
And this slide right here brilliantly illustrates the biggest risk of all: time. The cash burn is a huge problem because the timeline is so incredibly long. Yeah, the first modest revenue might come from selling some isotopes in 2026, but that's a rounding error. The first meaningful revenue from their core business, selling nuclear heat and power, isn't targeted until 2028. That is years away. And in the world of complex industrial projects, especially nuclear projects, timelines slip. It's almost a guarantee. A delay of 1 or 2 years isn't just an inconvenience. It could mean burning through another $1 billion of that cash fortress before seeing a single dime in return. And that, right there, is the core of the bear case. It's a race between the construction timeline and the cash burn rate.
That's a completely fair point, and it's one the company itself acknowledges in its SEC filings. I mean, they state it plainly for anyone to read. This isn't just about their own construction schedules. The regulatory hurdles with the Nuclear Regulatory Commission, the Department of Energy, these are major, unpredictable variables. They are building in one of the most complex, highly regulated industries on Earth. Public policy can change, public opinion can shift. These are massive external risks that even a $2.5 billion fortress can't fully protect against.
And for you, the investor, this all boils down to one simple term:
execution risk. It's the chasm between a beautiful blueprint on a PowerPoint slide and a profitable operating power plant. Oklo has to navigate a literal minefield of supply chains, regulatory approvals, construction milestones, and fuel sourcing just to get to 2028. This isn't software where you can just patch a bug and move on. A mistake here, a flawed calculation in the engineering, could cost hundreds of millions of dollars and set the entire project back years. The stakes are absolutely immense.
Okay, we've laid out the foundation, and we've examined all the cracks. We've seen the incredible strength of the balance sheet and the clear and present danger of the income statement. It's time for the verdict. Let's stack up the bull and bear cases side by side to make this crystal clear for everyone.
The bull case is clear, and you have to admit it is powerful. Oklo is exceptionally well capitalized to execute a multi-year plan. They're not at the mercy of the capital markets next quarter or even next year. They have a committed anchor customer in Meta, which is in the single most power-hungry sector in the world right now, artificial intelligence. And critically, they have the full weight of U.S. industrial policy and energy security goals pushing them forward with major tailwinds like tax credits and loan guarantees. They are building a durable, long-term solution for what is the defining energy problem of the next decade. This is heavy industrial lifting, but the potential reward is absolutely enormous.
But the bear case is just as compelling, and frankly, it's terrifying. The current $9.5 billion valuation is priced for absolute perfection in a business where perfection is nearly impossible to achieve. The cash burn is intense, and it's accelerating. The timeline to 2028 is long and it's fraught with risk. This is a speculative, high-risk bet on a company that has yet to prove it can execute its grand vision on a commercial scale. If they stumble, if a major regulatory approval gets delayed, if a key supply chain breaks down, this isn't just a crack in the foundation, it's a total collapse. It could be a high-tech, $10 billion cash incinerator.
So the crucial point for your portfolio is this. Your belief in Oklo depends entirely on your time horizon and your tolerance for extreme, and I mean extreme risk. The short-term numbers are ugly, and I guarantee you they're going to get uglier before they get better. But the long-term strategic position, if they can execute, is incredibly powerful. So the verdict is that it's a high-conviction, high-risk opportunity. It's not a trap for the informed, patient investor who understands this is a multi-year timeline, but it is a huge, huge risk for anyone else. Let's be crystal clear. This is a potential wealth destroyer for anyone who treats this like a short-term trade or underestimates the immense execution risk involved. This is a stock where thorough due diligence is not just recommended, it is absolutely required to protect your capital. That's our analysis. Subscribe for more no-nonsense breakdowns from Iron Financial, where we forge stronger portfolios.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.